again, today we are going over the indicators that I provided for you guys. Um, I'm gonna let you know how to use them, what they mean, and going over all the indicators. Oh, Joanne, you're new to this. That's good. That's good. Got some fresh people over here. I started trading back in last year in July. I'm gonna tell you guys. I'm gonna keep you guys entertained for a bit while we wait, but basically, when I first started, I started with wealth generators. I saw a post from a guy I didn't even know. I saw his post of results he was getting with wealth generator signals, and obviously, he would post, good results to attract people. So he attracted me. I joined wealth generators in July. Now, when I joined wealth generators, back then I was extremely broke. My check would go to my bills. I would not have anything left over. So I struggled a lot, and I asked this person who posted what it's all about. Oh, 1 second. So I was interested in trading or whatnot, but I had no idea what trading was. I knew nothing of the Forex market. And I knew of the stock market, the New York Stock Exchange, but nothing of the Forex market. I had no idea that you can trade currencies or anything like that. So this guy, he showed his results. I questioned him, and he showed me the hype. Basically, I joined over hype, and what that means is basically people are pumping you up and stuff, showing you what you're capable of doing in a certain field, whether or not they have the same results or not. So this person brought me in, and I told him before I joined, I told him the money I'm going to use to join is going to be my car payment. I asked him, am I going to be able to pay my car? Would I be able to make enough money in 2 weeks? Because it was the first week of July, and my car payment was on the 18th. So I asked him, am I going to be able to make enough money so I can pay my car payment back? Because I'm going to be using my car payment to join. So he said, yeah, like it's easy. You'll make $20 a day. You'll be able to easily obtain that. So I'm like, okay, I'm not worried. Let's make it happen. So I go into wealth generators, and this dude was helping me out for like the first 2 days, and randomly he just disappeared. No idea where he went. I kept sending him messages after message after message, no reply whatsoever. And I'm like, what the heck is going on? How am I supposed to make this money back and make my car payment for in the next 2 weeks? So I start messaging one of the top leaders in WG, or was in WG then. I messaged him. I'm like, okay, this dude, he's not messaging me. He told me he would teach me how to make this money and stuff like that, and he's not replying or anything. So this dude, his reply was, well, that's not my problem, or that's not my fault. And I'm like, okay, I didn't ask if it was your fault or not. I just need help. Can you help me? He couldn't help me because he had no idea how to trade. WG is a signal service. They only provide signals. They don't actually teach you how to trade a specific method. So I blew my money, lost all my money. Fortunately, I was able to make my car payment. And after that, I had issues with trading for the next 5 months. 2 months into WG, I ended up quitting, getting out of that business. Um, and I just tried to learn it myself. I got my hands on Steve Morrow's videos from a good friend, a current good friend of mine, and I met them through WG. So um, I saw the videos. They were extremely confusing. I had no idea what was going on. For 5 months, I struggled, and I just didn't understand the method to trading, at least the market maker method. So I went through various methods. There's another method that I went through. The first method I've ever went through was something called Luciano's theory, and that didn't work at all. So I I started going into the training. I didn't understand it, but I still kept going at it. Still kept going at it. I For some reason I felt so passionate about trading, and I had no idea how to make the money yet. I was just passionate about it. This is something I loved it, even though I was losing money, and I wanted to get it. I wanted to understand it. So 5 months in, I was getting extremely ready to quit, to just give it up because it wasn't working out. The team that I have now, they were failing as much as I was. I blew about 7 to 10 accounts, and I lost a lot of money. At least it was a lot of money to me. And I'm a business person, so fortunately, I was able to form a business that um, kept my income coming in, and eventually, money wasn't a problem anymore. So I'm like, you know what? The people that I was trading with, they're like, don't quit, just keep going. We're all in this together. If we can't quit, we can't lose you, we can't lose each other. So I kept going at it, and I finally had my breakthrough right before this new year. And that's when I started seeing results. The reason why I started seeing results was because I translated the market maker method into my own. Whatever I didn't understand, whatever I didn't see on the charts, I ignored it. And whatever I saw visually on it that I understood, I kept it, and I tweaked it a bit so it favored the way I was viewing it. So when this happened and I tweaked it so that it synced in with what I was viewing on the charts, then that's when everything started clicking. That's when I developed this method, and I started seeing results after results, and my teammates were surprised because I was the person who traded the longest on my trading group. So they were like, they knew I was gonna get it first. So finally I got it. They were all excited. It was crazy. I taught them what it is I learned, how I view things, and they all started learning it. So it was just an amazing experience. It automatically just clicked out of nowhere. Out of nowhere, it just clicked. The day before, I was like, oh man, I'm not getting this. Why can't I see it? Why can't I see it on the charts? Why do I keep losing money? Um, and then the next day, it was like, wow, that is just amazing. Now I have a way and a method to make money. Now I view things completely different. That's all it takes. It's just that click. That once that click happens, you won't be looking back anymore. You will forget about the moments where you were failing. You will forget about all of that because you would be so into making money now and trading now that your previous experiences would not pop in your head whatsoever because you're looking so forward to your future in it. That's what I want for you guys. I want it to click, and I want to help you guys make it click. And it will take time, of course, but it will happen. I can promise you that. I will help you until it clicks. So that's basically my story. And it was just an amazing experience. So let's go ahead and get started. Wow, Joanne, yeah, it sucks when stuff like that happens. She basically mentioned when she started, the person who brought her in disappeared out of nowhere. So that's one of the reasons why I don't like MLMs. MLMs aren't meant for everybody, but one thing I don't like about it is that not everybody is true. They just bring you in on the hype, and after that, they leave you alone. Try to figure it out on your own. That's one of the reasons why I don't like it. But hey, I mean, if you're an MLM and it's working out great for you, then great, awesome. 1 second, everyone. Okay, so let's go ahead and get started. All right, so once again, if you guys have any questions during the webinar, go ahead and post them onto wherever you click the link from, whether it was a chat, whether it was a post on a Facebook page. Post your questions there in the middle of the webinar. Go ahead and interrupt me. I don't care. I just want to make sure everybody understands while we are going through it, okay? Because I don't want to advance to something else and you guys are still confused about the previous thing, okay? So just make sure you guys ask questions because I want everybody to understand. All right, so let's go ahead and get started. All right, so once again, what we are going to be talking about is indicators. I provided indicators for you guys in the template, and I'm going to be going over what they mean, how to use them, stuff like that, okay? So let me share my screen. All right. Let's see. All right, can I get a confirmation that you guys can see my screen? Should say template setup. Anybody? Okay, good. All right, so this is how to download the indicators. If you guys haven't downloaded them yet, go ahead and screenshot this. I'm not going to go over it. If you guys do have trouble uploading the template and the indicators onto your platform, whether it's Mac or Windows, go ahead and message me personally, and I will send you a video that will help you through that. All right, so the indicators you guys should have is one of the indicators you guys should have is the session boxes. Okay, so in the charts you will find a light blue, a peach, and a maroon colored box. All right, so you can see them a lot clearer on the 15-minute time frame. The reason why is because these boxes are meant to be viewed off the 15-minute. Okay, so if you guys have tried to use the template and gone to the hour, 4 hour, eventually it disappears. but this template is used for the 15-minute. Steve Morrow teaches to only trade off the 15-minute. 15-minute is definitely a great time frame to trade off of. I don't trade any less than the 15-minute, but I do trade more than the 15-minute. Okay, so the light blue box is the Asian session. Now these times are Pacific time. Okay, these times are Pacific times. So we have 5:30 p.m. Asian session starts all the way to 12 a.m. So that's 8:30 Eastern and 3 o'clock a.m. Eastern. Central, that's 7:30 till 2 o'clock. Okay, now the peach colored box, that's London session, which is right after Asian. The template is called Updated Steve Morrow. So the peach color one is London session. Then we have the maroon colored one, dark red, whatever you want to call it, is the New York session. Okay, anything that's not colored is times you should not be trading, basically. Okay, you should not be trading outside of the boxes. All right, so let me show you an example. Okay, so here we have the light blue, peach, and the maroon. All right, so you can see that there's right here, there's no box. It's clear, right? It's just the background. That's dead gap there. Okay, dead gap. There are no market makers present, so this is called the market maker method. If there aren't any market makers present, then what's the point of trading? You aren't trading against anybody. Okay, so this method would not apply to trading in dead gap period. Now between each box, you can see there's a small gap there between this one as well. What those gaps indicate is gap time. Now, if you guys have seen the previous trainings from last week, one of the vocabulary words that you had to write down was gap time. What gap time is the 30 minutes between each session. So from Asian to London, there's a 30-minute gap in between. So you can see here it ends at 12. London begins at 12:30. New York opens at 6:30, but London closes at 6. There's 30 minutes in between those. Now, what does that mean exactly? Okay, so Asian session clocks in. All right, Asian market makers clock in. They go from 5:30 to 12 o'clock. Now, this gap time in between that, what's going on is London session is getting ready to clock in. So what they're doing is Asian session is handing over the information for London session so that London session knows what to do. What's up, buddy? So that London session knows what to do for London. Okay. So this is close the door, please. Thank you. So this is what happens in gap time. Asian session is giving info to London, transferring the information of what Asian session market makers did and what London session market makers should do, so that London already know what to do, and so they can be able to take people's money and whatnot, making it much easier. It's just like clocking in and clocking out. One person clocks in, they give the information to the next person that's going to be clocking in, stuff like that. Same thing in New York session. The gap time in between London and New York is just exchanging of information so that New York knows what to do during their session. Okay. All right. So those are the session boxes. If you guys don't have questions on that, good. All right. So now Another indicator that you guys will find is the daily high and the daily low. Now let me show you guys on a blank template, so that way you guys can see it clearly, because it's a little difficult to see it sometimes. Okay, so these dashed lines here, those are the daily high and the daily low. Okay, so this one is forming here. Okay, what it means is this present dashed line on this current day, the daily high and the daily low are from the previous day. Okay, so this daily high is from the previous day, so it's the previous daily high right here. It would be this one here. Okay, the reason why is because it gives you an idea of, it better helps the method and trading on the current day to know what the previous day high is, and you'll understand more through the training. So that's what it means, is the previous day's high and the previous day's low. Okay, so if it's on the current day, just know that this dashed line shows the previous day's daily high and daily low. Okay, so that's for that indicator there. All right, now let me show you, let's see. So right here we have the light blue dashed lines across the charts. Those indicate the previous day high and day low. So I'll give you guys time to write that down as well. All right, now as you can see, I say there are two shadow boxes above and below the London box. Those you will ignore for now. I will have, because I have no idea how to take those down, because I have no idea how to use them. I don't use them myself. But I do have trainers from Empire that know how to use them. And for that, you actually need a membership to actually know how to use those. I personally don't use them, so you won't need to. But if you are interested in learning how to use them, one of our trainers can better assist you with that. So the EMAs. All right, let's see. Let me put them on, then I will show you. I guess I don't have them on here. Let me see if I can. 1 second. Okay, so here we have EMAs here. What they stand for is exponential moving average. What they do is they help determine the trend. They can also be used as support and resistance. So here I have the 50, the value 50 EMA, and the value of 200. So the 50 EMA moves with current price. It moves more with current price. Okay, now the 200, the higher you go, 200, 400, 800, the higher you go on the value of these lines, the less it moves. So it basically can be used as to figure out what the trend is for the current currency pair. It can also be used as support and resistance. Most people think the higher the value of the EMA, the stronger the support or the resistance. Now, yes, and many times that is true. I currently don't use them. I use naked charts. I don't use any indicators whatsoever, but I'm soon enough I'll be implementing them into my trading and training just to better assist you guys in learning it. So the values that Steve Morrow uses, let me check. Okay. Well, that it uses is the light blue, which is the 50 EMA, and also called the water because it looks like water, it's light blue. So the 50 AMA, the white one, which is considered the Mayo, that's how Steve Morrow translates it. That's the nickname he gave that line. The Mayo is the 200 EMA. And the Blueberry, which is the blue line, which I don't have on my charts, is the 800 value. So let me show you how to add these EMAs. So you're going to go to your indicator list, go to custom, then go to custom moving averages. When you go to custom moving averages, you're going to go to inputs. You're going to double click on simple and move it to exponential. You're going to select exponential, select your value. Let's put 50. And if you want to color code it, this would be considered the water. Okay. Then click OK. There you go, your 50 EMA. Now, if you want to add all the rest of them, go to custom moving averages, go to inputs, select your value. Let's do 800. Select exponential, press OK. Now, as you can see, you guys didn't see the 800 pop up. The reason why is because this one doesn't move with current price as much as the lower values. So if you look at a higher time frame, you'll be able to see the 800 is right here, the red line. Okay, it moves a lot slower with price. Okay, now if the daily, you can see it even better. We have the 800 here, we have the 50 down here. Once again, you can use these as support and resistance. You can see with the 50 EMA, if you go on the 15, look how it wicks this line. So it could also be used as support and resistance. It could also be used at take profits area, or it could be used for to put your stop loss, stuff like that. Okay, so you can see it bouncing off the line, bouncing off the line. Okay, so that's mainly what the EMAs are used for. Okay, so that's basically what the EMAs are used for. I personally use, or going to use, 50, 200, and 800. If you guys are interested in using the EMAs, I will get into it later on in the training. Okay, so let me take these out. All right, so all right, so we have, let me go over this again in case you guys didn't get a chance to write it. EMA stands for exponential moving averages. So we have the light blue line, which is valued at 50, and it is called the water. Okay, we nickname it the water. So if I tell you M formation, okay, wait for the second leg to not break the water, take your entry based off the wick of the water, and price not breaking the water, that's what that means. M formation right under the water is being used as resistance. If the second leg wicks the water, which is a 50 EMA, then take your entry. That's what I mean by it. Okay. So now we have the white line, which is valued at 200, and the nickname is Mayo, mayonnaise. Okay. We like to use Mayo short term. All right. So now we have the blue line, which is basically the red line, the 800 I just showed you, but we color coded blue, and we call it blueberry. All right. Wait for price to come back down, hit the blueberry, wait for a strong pullback, then take entry off of blueberry acting as support, stuff like that. Okay. All right. So These are the different trading options. You have a buy stop, buy limit, sell stop, sell limit. Take a screenshot if you can. Write it down if you want. I'll give you guys a second to do so. For those that didn't get it previously, buy stop is you put, these are pending orders, okay? It's not necessarily once you click it, you're currently in a trade. What it means is you're predicting a future trade, okay? Buy stop, you set a buy at a specific price because you believe price will come to that price you put for your pending order and continue to go up after it hits that line. Sell stop is the same thing, but the opposite. You put a pending order at a current price because you believe price will come down to that line where you put your pending order and continue down. Now, buy limit, you put a buy at a place lower than the current price because you believe price will come down, hit this current price where my line is, then shoot up. Okay, now sell limit, you place it above the current price. You believe price will go up, touch that line where you put your pending at, and then fall down. Okay, so you're basically predicting price is going to come here, then it's going to reverse. Okay. All right, so many people get confused about this. The spread. The spread of a pair is the difference in pips between the ask and, so it would be the ask and the bid price. Okay, so there's a buy price and a sell price. All right, this is the reason why you start negative when placing a trade. Okay, so the spread is the commission you pay your broker. Whatever the spread is in amount of pips and whatever lot size you place on that trade, that determines how much your broker is getting paid for you placing that trade. Okay, so the spread is different in many different currency pairs. The spread could be higher, the spread could be lower, but you have to make sure you look at the spread and determine your lot size based off of that as well. Because you can have a currency pair that has a spread of 1 pip. So if you put a 10-cent lot size, that's $1. You will start off in the negative. But then you have another currency pair where the spread is 15 pips or 10 pips, make it easier. Okay, and you put a 10-cent lot size. You will start in the negative by $10. With $10, okay? So the reason why is you start in the negative because your broker wants you to pay them first before you pay yourself. That's how that works. All right, now your take profit. Once you place a trade or when you place a pending order, you can set a take profit. What that means is basically you expect for price to come to that. Once you place your trade or your pending and it activates, and you have an active trade on the charts, once you believe that, let's say the price is going to drop 30 pips. So you place your take profit based off of how far down or where you want to close your trade. Okay, so take profit, you put it on your trade that you want your take profit at this price, and it will automatically do it for you. You won't have to press any buttons anymore after that if your take profit is accurate. Okay, if it goes down and hits your take profit, it would automatically close the trade for you. Now your stop loss, what that is, one second. Okay, your stop loss, what your stop loss is basically, it's the opposite of take profits. So instead of how much you want to win or willing to win, your stop loss is how much you are willing to lose if the trade goes against you. Okay, so to put a stop loss, you can put it at with a pending trade or a current executed trade. So what you do is basically you place the price on your trade that the amount you are willing to lose. Okay, so you depending on how many pips or what your risk management is, your current risk management is, um, you would place a stop loss based off of that. How much you can lose, how much you are willing to lose based off of your risk management advice or whatever you go based off of. Okay. So I'm gonna show you guys a couple examples as well. That you can ignore. Okay, so for risk management, let me edit this really quick. All right, so because I'm updating it, I kind of calculated it wrong. This is the risk management that I recommend. Let me skip this one. I'm sure you guys get the point after that. Okay, so this is the risk management that I provide and I go based off of. If you're starting with $100 account or less, you use a penny lot size. For every $100, you can add a penny to your lot size. Okay. So we have 100, 1 penny lot size, 200, 2 penny lot size, 300, 3 penny lot size. Not, I forgot to change that as well. 3, 4, 5, 6, 7. Now, many of you are going to be like, oh, but that's too little. I'm not going to make that much money off of it. The reason why I have the lot size so low, 1 second. All right, so the reason why I have it set like this is because this gives you the opportunity to place multiple trades with different currency pairs. So instead of investing 5-cent lot size with a $100 account on one trade that may or may not go your way, it's better to invest 1-cent lot sizes on 5 different pairs because you have better chance of winning money compared to just investing one thing on one pair. Okay, one lot size on one pair. So like many people say, don't put all your eggs in one basket, right? So this is an example of it. So if you go all the way and you have $1,000 in your account, you accumulate, you go to 200, then you grow to 300, grow to 4, 5, 6, 7. Once you get to $1,000, that's where you want to be, because 10-cent lot sizes, that's $1 per pip. I average 800 plus. I've had 1,000. The last time I've traded, I've averaged about 1,000 plus pips a week. Okay, um, that's doing it full time. So just imagine having 500 pips in a week, and you have $1,000 account, and you have 10-cent lot size that you can use. You catch 500 pips that week using these lot sizes. 10-cent lot size is $1 per pip. What's $1 times 500? That's $500 you made that week. So that will easily accumulate to 2,000 after that, right? Once you get a 2,000, you can use 12-cent lot sizes. Now, when you get to $2,000 in your account, you will be able to use 20-cent lot sizes. Now, to get a picture of it, 20-cent lot sizes is $2 per pip. You catch 500 pips that week. That's $1,000 that you made for that week. Now, let's say you have $1,000 in your account. You use a 10-cent lot size on 2 different currency pairs. You catch 500 pips total. That's $500 you made. So that brings it up to 1,500. And the next week after that, you catch the same amount of pips. You bring it up to $2,000. The next week after that, you catch the same amount of pips, maybe more. Because you've gotten so good at the method that you see it clearly, you can catch these setups. Okay? So you use a 20-cent lot size because you have already brought your account to $2,000. 20-cent lot size, you catch 500 pips. That's $1,000. So with $2,000 account, you grew your account to $3,000 in a matter of a week. You made $1,000 in 1 week. You grew your account to $3,000. Now you can use 30-cent lot sizes. That's $3 per pip. That's $1,500 a week. From 3,000, you grew it to 4,500. You see what I'm getting here? Be patient with this risk management here. Because when you do get to this amount and you don't blow it using 5-cent lot sizes on a $100 account, it will pay off at the end. Once you get to $1,000, you will consistently grow. Because if you were able to turn 100 into $1,000 using this proper risk management, that means you're consistent with your profits. That means you have mastered the method and mastered your trading. So you are consistently profitable, which means you will have no problem whatsoever using these lot sizes with these accounts and growing your money easily every week. That's the whole point here. Okay? Traders need to be patient. That's one of the things that most people don't understand when they begin trading. They're beginners in trading. They're learning the method. They think they're going to get rich quick overnight. No, it doesn't happen like that. You have to be very patient. I currently still do not possess the amount of money that I want to make. I'm consistently profitable, but I have not reached my goal. My goal was to be a millionaire trader within the next year. Now, let me show you guys what is possible. I'm going to show you guys what is possible. Let's see. Let me see if I have it here. One second. don't think I have it here. Okay, here it is. Now this is a compound sheet that I created. Well, I didn't, yeah, I created it, but I copied it as well. Okay, so penny lot sizes, it would be 10 cents per pip. Yes. Penny lot sizes, 10 cents per pip. If you catch 500 pips that week, 10 cents times 500 pips, that is, I think, $50, if I'm not mistaken. So $50 that week. Okay, so look, this is on the left here. These are the number of trades. Okay, so each one counts as a trade. So this is trade number 1, trade number 2, trade number 3, trade number 4. This goes all the way down to a whole year, 365. So I'm about to show you guys some crazy stuff. Okay, this is starting with a $100 account, using risk management, 1 cent lot sizes. Your first trade should be a profit of $5. 5% per trade. 5% of $100 is $5. So you want to, the first trade is going to be $5. Okay. Now your second trade, 5% of $105. That's $10.25. That's $5.25, okay, that you increase from the previous trade. So each trade, you have a goal. Okay, if you didn't meet that goal, you take it on the next one. But basically, you want to meet each goal. All right, so now it compounds to 105, 110, 15, 21, 27. Keep going down. By your, let's see, by your 47th trade or 47th day, depending on how you want to do it, you'll be at, by your 48th, you'll be at $1,000 in your account. 48 trades, okay, or 48 days. Now, you can take 10 trades in one day. So 10 trades in one day, your goal is to basically profit $62 using risk management, using the lot sizes I recommended. This is all based off of the lot size I recommend. Okay, so $1,000 on your 48th trade. Now you're using risk management once again. Now 10 cents, so 10-cent lot sizes, each pip, that's $1. So basically from 1,040 to 1,092, that's $52 difference. So you have to make $52 to advance to trade number 50. $52, 10 cents lot size, that's $1 per pip. You just have to catch 50 pips and you've gotten there. That's it. Simple as that. Okay. Now you go down to 84. Your 84th trade, you're at over $5,000. Okay. So now with this, you're using 50-cent lot sizes. That's $5 per pip. The difference between 83 and 84 trade is around $261. $261. So if you are making $5 per pip, $261 is your goal to get to your next trade. That's what? $5, 5, 20, 20, 40, 40. That's around 50 something pips. 50 or so pips to get there. That's it. 50 pips, yeah. I believe it's 50. So that's all it takes. That's all it takes. So you accumulate, keep compounding, keep compounding. You got 30,000, 40,000, 50, 100,000. Keep going, and eventually you will be a millionaire off of less than 200 trades. I take in a span of like 2 weeks, 3 weeks. No, in the span of a month, I've taken around 100 and something trades. So just imagine, this is what you are capable of. Okay, keep compounding. This is billionaire status. Yeah, this looks like billionaire status, if I'm not mistaken. Yeah, I think. Let me double check. No, never mind. Oh, wait, actually, yeah. On your 341 trade, you'll be a billionaire. Okay. 365 trades, you can be, you can have $3 billion right there. Okay. So obviously that doesn't count if you lose trades and stuff like that. That is why you will learn risk management and how to set your stop losses so you can minimize your risk and keep compounding. Now, my method, along with Steve Morrow's way of training, very accurate when it comes to profits. Okay. So you can definitely rely on the least amount of losses in trading with our methods. I believe the Steve Morrow's method, the market maker method, he's the original founder. And my method, which is a tweaked version of his method and much simpler, is the highest accurate and most profitable method and merchandise, or however you want to call it, in the market. I believe that it's better than the scanners, better than what WG has to offer, is better than any other training material anybody else has to offer. The reason why is because the winning ratio compared to the losing ratio is so, there's a huge difference. I've never seen something better or more accurate than the method that I'm teaching you, and the method that Steve Morrow teaches, his way of teaching. So you can easily use this. Now, if there's anybody that wants this compound sheet, go ahead and message me personally and I will send it to you. Okay. So that is what you can make off of $100 account. There's also a $500 account that I have, and I believe I might have a $10 account as well. Let me check. Yeah, $10 account can be turned into $1 million. Okay. So it's all about patience here. You can get to where you want to go. Just have to be patient and consistently working, and don't quit. And make sure you use risk management. All right. So let me bring up the template. I won't keep you guys much longer. Just need to make sure that I went over everything. All right. So we have the EMAs here. We have the 50, the 200, and I don't have the 800 here, I don't believe. Yeah, I actually do. Here, the Blueberry. 800 EMA here. All right. Then we have the session boxes. Already cleared that up. We have the dead gap and the gap time. We have the daily high, daily low. Now the range. The range is this number right below the session boxes. What does that mean? What that means is the amount of pips that was moved during that session, meaning how high, or like the range of that session box or that session. So in this Asian session box on May 2nd, the lowest and the highest, the difference in pips is 34.2. For London, 85.3. For New York, 42.8. Okay, so that is the range for each session box. It makes it very easy to be able to see what sessions move the most, stuff like that. Okay, and you can predict your schedule or set up your schedule based off of that as well. All right, so we have the range. Now the top right here, this price right here is the current price in the market. So the big green numbers, current price in the market. The spread is the difference between the bid and ask price. Okay, so the spread is included right here, so that way you don't have to calculate it yourself. Then we have the high and the low. What that means is the high of the day and the low of the day. Okay, so it's telling you what the high and the low of the day is already. If it passes the current high of the day, it'll change the numbers, it'll update it, stuff like that. Okay, now the candle time, what that is how long the candle has until it closes and a new candle opens. So that's convenient there for you. The TDI, I won't be telling you guys what that is now because it'll just confuse you guys, which is this bottom thing right here. Many people use RSI. With the market maker method, we mainly use TDI because that's what Steve Morrow teaches us. Okay. Okay, so I have a question here. What about the time frames on the chart? Do they actually match up on EST? You mean Eastern? These times here, they automatically, it's not about a time zone that you're in, it's off of the time zone your broker is in. So whether you're Eastern time, Central time, or whatever, your session boxes go based off of where your broker is located, not where you are located. Okay, so yeah, that's how that works. So this is for Traders Way here. If you guys have a different broker, let me know if the session boxes do appear differently, because brokers can be located in different places. And I want to make sure you guys are having accurate session boxes there. So let me know if it is different compared to what I'm showing you here and the session times I told you guys about. Yes, so the session boxes are at the right place. Okay, so let's see here. So currently, okay, so Asian session started at 5:30, right? So that means 5:30. The current time for me is 8 o'clock. 5:30, 5:45, 6, 6:15, 6:30, 6:45, 7, 7:15, 7:30, 7:45, 8. That means there should be, I think there should be 10 candlesticks on the 15-minute chart. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10, and the current one is being worked on. Okay, so we have 10 candlesticks showing you that the session box opens up when the first candlestick opens up for Asian session. Okay, so this is accurate, as you can see that I show you an example here. All right, so that is basically it. All right, that's basically it for the training today. I just showed you guys a brief details about the indicators you will be using and I will be teaching in the near future. So the TDI, hopefully soon I'll be able to teach you guys, but that's the last thing I want to worry about. That's definitely something that's a big factor to the trading as well, Steve Morrow's trading. So that's basically it for tonight, guys. I'll let you guys go. And tomorrow we have another training session, same time, 7 p.m. Pacific time, 10 Eastern, 9 Central. All right. So I will be catching you guys tomorrow. If you guys have any questions, message me personally. The recording will be edited and will be available this week. All right. Have a good night.